Hey guys, I'm Oren Klaff. This is the game of money, and what we were talking about is deal making today. And this is Jacques Bazinet, who I met at the fund launch event in Orlando when I spoke. We bumped into each other in the hallway. And so I met tons of people there at that event, especially coming off the stage, speaking, 1,500 people. And I started talking a little bit to Jacques, and I immediately knew that he was a real deal maker, doing real deals in which money is moving. I can tell you this, and people don't necessarily like this. Beginners or people who have started deals but not completed them, not exited, and have not really been in the game of money all the way through, have an aura of incompleteness, have an aura of neediness, have an aura of I haven't done this before, but I'm pretending that I have. And if you think you're winning by pretending, you're not. Just be honest. I knew immediately in 10 seconds, Jacques does deals, he's in deals, he's completed deals, and he's really an insider to the deal. But I know that. I didn't have his data. I didn't have his information. I didn't have his balance sheet. I just had the manner in which he carried himself. And it turned out, my 10-second intuition turned out to be true. Because we stayed in contact, and we started doing things, and eventually started doing things together. This is a deal maker. Jacques, welcome. Tell us a little bit about the business you're in, the kinds of deals you do, and your own impression of what the difference is between somebody who is working on closing deals, excited about a deal, has a deal, but hasn't been full cycle, and what clues you get when you start working with someone if they've really done a deal or if they haven't.
Oren, pleasure to be here. Thank you for the invitation. Talis Holdings, we've been around for 37 years. We've done 31 deals to be exact, 7,500 units. We have an average IRR of in the high 30s.
Wow.
And to answer your question, I feel that when you work with people who've done deals, they're actually talking about the deal and they're not promoting. You feel the difference in the way that they're talking about the deal. This happened, and we're all aware if you've done 30 deals that they don't go the way you planned ever. So you're not all excited. You're like, we've done one, we've done this happened. You could tell by the way that they're describing the deal that they're either promoters or they're real deal makers that have actually done acquisition and disposition.
And I feel like I have this thesis that 8 out of 10 people you meet, not in an inner circle, not in introductions, but out cold at conferences that you might meet online or on a Zoom call, and they say they're an investor. 8 out of 10 people I feel are not investors. Because here, I think we talked about a little bit. If you say I'm a policeman, great. Where? In Los Angeles, in Carlsbad, in Riverside? What department are you in? Are you in the sheriff's department? Do you ride a squad car? Do you have a partner? There's some breadcrumbs, or you can't just say I'm a policeman, because then you have to produce like all this evidence around that. I'm a fireman. Oh, really? What department? Are you in the fire engine? Are you in the dispatch? You ride the back of the thing? Are you in the ambulance? I'm a college professor. My dad was a college professor. I couldn't just go somewhere and say I'm a college. Where? What university? What's your specialty? Are you a PhD? Are you associate professor? What are you published in? But all for saying I'm an investor, right? And people are like, oh, wow. And people don't know how to validate that or proof that or get an understanding of what that means. And so what you have is kids or even grown-ups, not kids, but I'm talking about 24-year-olds, even people 45-year-olds, so walking around, they go, I'm an investor. People don't know how to validate that. They visualize that they're flying around on jet airplanes, hanging out with crypto bros, and doing all this luxurious stuff. And so people who say I'm an investor get rewarded heavily for saying that. They get into rooms, they get into conversations, they get access to people that they really don't merit. And so I'm interested because I know, do you feel this effect as well, that a lot of the people that you meet who say they're an investor aren't really?
It goes further than that. Actually, I think that many people who are truly investors wouldn't introduce themselves that way. Because if you had $150 million worth of cash to deploy, the last thing you'd want to do is be wearing a moniker that says, I'm trying to deploy capital. You want to get to know people truly for who they are. So you probably wouldn't start the introduction that way. Another thing I've found is that a lot of investors that have invested and will invest are currently not investing. And they'll introduce themselves as investors because they're trying to gather a pipeline. They're trying to put together a whole bunch of deals so that they can go leverage some capital. So I would agree that individuals who introduce themselves as investors are probably not. And another thing that John, the founder of Talis, and we've put together over the years, we used to call it our 50% rule. Post-COVID, we now call it our 98% rule. And really what we found is 98% of what you hear is not true. People, and it's not that people are lying to you. So I'm not calling 98% of people liars. They have fundamental attribution errors. They're ignorant. They're not quite sure. They're promoting. They're hoping. For many reasons, they're saying things that aren't actually true. And really what we're looking for is...
It's true to them, right? So they read it and they with it, not enough, diligence or not enough divergent perspective are repeating things that were given to them, wrote. And so it can come across as truthful because to them it's true. They just haven't done enough work to prove it up. And now they're promoting.
I'd love to share the flip side of the story that you experienced at Fund Launch. We go to Fund Launch and you speak on stage. You did a wonderful job, by the way. I think that pitch that you did was absolutely phenomenal and actually like an icon in the Fund Launch community. We all talk about it. You get off stage and then you get attacked by a whole bunch of people who, are all try to present themselves. And I said to myself, I said, you know what? If Oren and I are going to connect, we're going to connect in a real way. We're not going to connect on the side of the stage. He's going to be here for a while. We connected later on. And I think it was different in kind because I was like, Oren, well done. Here's what we're working on. I think the whole energy of when we connected was different than the group of people that were Oren Klaff junkies that attacked you after the stage.
I think in capital markets, I think you're exactly right. Somebody with $50 million, the last thing they want to do is for anybody to know they have $50 million. The deal that I'm in, the second I announced how fast it was going, boom, people popped out of the woodwork saying, hey, I want stock. I'm going to sue you, just for no other reason than we're starting to demonstrate some success in the deal. And so the last thing you want to know, the last thing you want people to know is that you're successful or that you have stores of capital. You have a man in full, or what was the Denzel Washington movie where he's protecting the family from getting kidnapped in Mexico? I think a man in full, man on fire, right? The last thing you want is for people to know that you're sitting on $100 million of cash and now you need bodyguards, and then you need all kinds of stuff. So it's not likely that somebody is promoting that they actually, now if they have a fund, they can say, hey, we just announced, our new fund as a corporate entity and everything like that. But people are not going to tell you that they are successful. People are not going to tell you that they have cash.
I have one that's even So tomorrow I'm going to an event where there's a whole bunch of investors. And the context for the investment at the event is, I think they call it cars and coin. So we're going to an event where everybody's bringing their exotic cars and we're going to be talking about investment. And I told the organizers, I said, I bet you your biggest investor is not over 15 million. Because if someone is bringing their exotic car to an event to have a conversation about investment, that's probably where they're at. You're not having any centimillionaires, you're not having any billionaires that would want to associate with an exotic car as a way to introduce themselves. And they said, you're absolutely right. Our average investor is check writer is between 250,000. And I think our biggest check was around 6 million. I'm like, yeah, that's the kind of event it is. Because if you're needed to have an exotic car to do an introduction, that's probably the check you're writing.
Here, I'll tell you an interesting flip side of that. You've been here. When I close a deal, I just buy a deal trophy. Not unlike other people, I've closed a lot of deals. I got a bunch of cars here in the little mini museum. And people are always like, hey, that Lamborghini is caked in dust and it's hooked up to a battery charger. Do you ever take it out? And really, I don't, because I'm in the middle of a deal. Like you take that, those are things you take out, those things you do at the end of a deal. But I always feel like I'm asking people to ride along with me, to invest in me. And I'm specifically not driving around in a Lamborghini. It is 100% the wrong message. I can't avoid having it. It's a whole story, but I drive it rarely. And at the end of a deal, we're exiting it and celebratory, and then it goes back into parking.
Yeah.
But when I'm in the middle of a deal, I never drive the exotic cars. I literally drive a Sprinter van.
Yeah. It's so interesting you bring that up. By the way, thank you for hosting that event. It was absolutely phenomenal. And I spoke to my wife about it. And I told her, I said, he's got these bikes, he's got these cars. And they're dusty. And I asked him, what are you doing? And he's got no interest. He's not vested in these cars. And I said, why don't you get rid of them? He says, they're trophies. These are trophies from deals that I've closed. My wife and I have decided that our trophies are vacations. We do experiences with our kids, with our families. We know when we closed Avondale, we went on the Italian trip. When we closed this, we went on Jerusalem and did a church history tour. I told my wife, I said, I'm just so happy that our trophies are events, so I don't need a warehouse to house them. But I do love your trophies.
Yeah, no, thank you. I think when I'm seeing that a lot is people close a deal and they want to celebrate that with something. And I've been a motorhead my whole life and I like it. Getting back to deals, I think so. You've got to sort out when I talk to people and they say, hey, we're looking at a deal, I'm an investor. The one thing I like, around when I met you, like you had checked all the boxes. This is a guy doing deals. He's moving capital. He's exited deals. And I have a concern. But when those like little red flags go up, I immediately ask one thing: what's your capital overhang? And so people start scratching their head, or what does that mean? Or what do you mean by that? To me, that's like insider code for somebody should be able to respond to that. And so what kind of code words or metrics or what things do you throw at people to see if they're real?
It's really interesting to me, Oren, whether the person has capital or not. My first instinct is to know whether I want to work with this person, period. Because there might be some people that have $1 billion to deploy, and I would never do a deal with them. And there might be people that don't have $1, but I would like to transact with them. I would like to work with them. And maybe somehow they're a deal maker. So for me, my first instinct is to get to know them. And that's why I watched you interact with all those Oren Klaff junkies that were all attacking on this. How is he interacting with them? What's he saying? Is he respectful? Is he kind? And I'm like, yeah, this is the type of person I want to work with. So even before I start getting a dollar sign of how much money do they have to deploy or do they have dollars to deploy, I'm actually computing, do I want to transact with this individual? Do they have the characteristics of somebody that I want to be in a long-term relationship with?
I think that's great. Because it's happening once, I try and go out with people for coffee and I see how they interact with the coffee barista. So the coffee barista is serving the coffee. We're making $12 an hour, $15, I don't care, $20 an hour. They're clearly, this is in at least in Southern California, it's hard to make ends meet. And there's no joy in making that person's life tougher or more high friction or challenging. So when I always see somebody get mad, hey, it's not right, or we don't have cinnamon. What do you mean? Oh, it's a real coffee shop. I want cinnamon in my macchiato. And they're like, we don't have cinnamon because it's a very like purist coffee shop here in downtown Encinitas where they're called Lofty. It's not like they have 17 different cappuccinos. They have coffee and coffee. When they just opened, I went there and I go, hey, I'd like regular coffee with an and shot. And they go, we don't do that. You can either have the shot or you can have the coffee, but we're not going to prostitute the coffee and the espresso by putting it together. So I go, okay, great, no problem. I'll just have a drip coffee and I'll have an espresso. And they go, no. Now that we know what you're going to do with it, we're not going to sell it to you. Like very critical acclaimed coffee shop. So guy goes there and he orders a cappuccino or macchiato, which is a little coffee with a little bit of foam in it. And he was, I'd like some cinnamon. And we don't have cinnamon. And then he berated them. What do you mean you don't have cinnamon? How can you order a coffee shop? And I'm like, what kind of person, right? What kind of human makes a coffee shop person that's so proud of their coffee shop, specialized, putting pride into the way they pull the espresso, feel bad and get into high conflict mode with somebody who's clearly doing something they're passionate about, but are not making a lot of money, will struggle making ends meet. Why would you do that? Right? And so that turned out to be the correct impression on that person. They're horrible. This is just Instagram stuff. If you're cruel to somebody who is below you and that are socially above and financially above, and you're cruel to that person for no reason, guess what you're going to do to the other people, right? And we saw that, and that turned out to be true. Yeah. So how they behave around other people is really important. For me, red flags tend to be, I think, sort of like inability to focus, like checking the phone is ringing, distracted, and just not being able to be present in the moment. And when you're meeting people at these conferences, other red flags, it says, hey, this is not a person you want to work with, or this is not an investor that you should be spending time with, is I think they're asking you to send them information, talking through as a sense of, hey, what's the size of your deal? What's the geography? What's the domain of it? And having a little bit of conversation about it. and prematurely saying, send me information. Oh, let me add one other thing. The other thing is like, hey, I'm quickie. Just give me a quick 90-second overview. I'm like, can you describe your
deal in that anything?
That's a very high bar that most people can get. Like, no real deals compress themselves truly into an elevator pitch. I think that's a myth. So those are some red flags.
Another one that I notice, Oren, is when you're meeting somebody, there's usually like a balance between, let me share a few things, let me hear a few things. Some people, they're just constantly promoting, and they don't ask a question about where you're at, where you're from, what's going on. It's just one-sided. And I think that those people that have those one-sided conversations are actually unconscious that they're doing it. It's just their modus operandi. They just do it. But that to me connotes someone who doesn't have empathy and understanding and the level of self-confidence required to allow co-managing in a transaction.
Yeah, and I think shtick too. So prepared shtick when you're talking to someone, when they're rolling out material that's clearly they've done 1,000 times, that's prepackaged or not in the conversation, responding to you, feeding the conversation and reacting, and they're rolling out shtick. I was on a radio show and I met one of the authors of Chicken Soup for the Soul. I thought it was really cool. But that's a book that sold a lot of copies. And the more up in years, I started talking to him, and it's just 100%, no other word for like shtick, like not connected. This happened to me. I met Emmitt Smith, the football player. I was speaking at a conference, and they go, would you like to meet Emmitt Smith? I go, I'd love to. They go, great. You're the speaker. He's the speaker. You're the only two speakers at the conference. I'll put you guys together for 20 minutes. You can have lunch together. And so I roll in there, and I could just see, to be fair, everybody in America knows Emmitt Smith. And not only is he a championship Cowboys running back in the circle of whatever they call it, the Dallas Cowboys, but he won Dancing with the Stars. And at that point, he was just flaming hot in American popular culture. And I'm a 40-something white guy, football fan who was like, he's seen a million guys, and he gets thrown in a room with me for 20 minutes, and it's just fatiguing for him. And it's just like another fanboy. So we go in there, and the host is introducing us, and he goes, hey, Oren, I'd like to introduce you to. I go, oh my God, this is amazing. I never, ever thought that I would ever, I'm such a football fan, I never thought I would ever be able to meet Randall Cunningham. And Randall Cunningham was a quarterback for the Eagles. He goes, I am Randall Cunningham. I was like, how are you? I'm confused. Like, I thought, you're not? Like, you played for the Eagles, right? He's not played for the Eagles. And so I took a little bit of that away from him. And then we were able to get in some like real, actual, authentic conversation once I took the shtick or the prepared material away in that way of frame control. But yeah, people roll out like not funny jokes, shtick, or also can't be present in the moment. That's a huge red flag for me.
Yeah. It's interesting. I don't want to start throwing out stars, but one that I met by accident, I was at a restaurant in Miami, and Will Smith was sitting next to us. And his voice is just so distinct. His laugh is so distinct. There's no way that you're wondering who it is. It's obviously Will Smith. And I'm at a table, and he's with 6 or 7 other guests. And they finally finish, and they walk away. And he walks right by me, and it's Will Smith. When's the next opportunity? So I said, Will, is there any chance that you would take a picture with our table? And he puts his hand on a chair, and he looks at me, and he goes, I would just never do that. I wouldn't do that because I don't know you guys. Like, what am I going to do? Take a picture with total strangers? That would just be uncomfortable. And everybody at my table is, oh my gosh, Jacques, here you are in front of your skis again. He pulls the chair, sits at our table, and says, let's get to know each other. Let's get to know each other first before we take a picture. It's just an interesting kind of scenario as to he could have totally blown us off, and he was like, no, if we're going to take a picture together, I need to know you guys. What are your names? Where are you from? What are you going on? Why are you here?
I was told you should never name drop. Al Pacino, actually, he told me that. So, yeah, just kidding. Shtick, bad shtick. But I have a friend who lives in West Hollywood. When he sees at the Whole Foods, I live there as well, stars all the time. And he told me he does this all the time. He walks up, I can't remember, I think it was Slash. So Slash is walking through the Whole Foods in West Hollywood. And he walks up, and he goes, hey, he's got his phone. He goes, hey, would you take a picture? And his wife is there. And Slash is like, yeah, sure. And so he hands him the phone. So he hands Slash the phone, and he's sitting there posing with his wife. He's like, yo, try and get our full body. So he hands Slash the phone to take the photo. I thought that was so smart. And
I don't want you in the picture. I just need a picture of my wife.
I love that. I love flipping it around. I think ultimately if you're new to deal making, if it's cliche, if it's needy, if you can't have a present conversation with somebody in the domain they're in, then just try and tell people where you really are rather than saying you're an investor or I'm a deal maker. I just much rather say, listen, the way I think about it is if you're doing motocross and the boys are riding 450s and it's your first day out there, you're going to get hurt if you try to be the cool kid. And you get in there, you're going to be way over your skis, riding with the big boys. It's just better to say, hey, I've only ridden 3 or 4 times. My skill level is not that high. I'm just going to be hanging back. Keep an eye on me. I'm not doing any whoops. I don't want to mess your group up, but I am still like in learning mode and I'm uncomfortable with this level of terrain. And I understand if you guys want to go on ahead and just be honest about where you are. And you can take that same direction in the capital markets and go, hey, look, I'm in the middle of a deal. I've never dragged one across the line. Yeah. I understand, right? You guys are transacting. You're looking for capital. No, not quite where, but I'd love to be able to share this with you. But I just want to let you know, like where I am. I'm halfway through my first deal, and you're going to get far less chance of you getting injured if you are able to really tell people where you are. And the flip side of that is there's no advantage to over promoting because people are going to find Jacques is going to find out in 3 minutes who you really are. Like it's one area where you run naked. If nobody knows you, you don't know the insider terminology, you don't have the documentation, you don't have a data room, you don't have a track record, there's no LinkedIn on you. It's not possible that there aren't, if you're a real capital markets player, there aren't breadcrumbs all over the place leading to the fact that you are. It's very exposing.
Yeah. And you said it best from your stage 2 weekends ago when I was there. You said, when you go in, if you ask for money, more often than not, you'll get advice. But if you go in asking for advice, usually you'll end up with some money. And it's the way to engage people. If you go in and you're a promoter, they're trying to figure you out. If you go in and you're fully exposed, you say, listen, this is where I'm at. This is what the deal looks like. What are you thinking? You've done a lot of deals. How would you structure this? Am I structuring it the right way? It's like you did when you defuse the football player. You defuse it. When you ask a question and you're like, hey, I'm just trying to figure this out. I've done deals. You've done deals. Is this structured right? Would you account this, my values the right way? My site value, my costs right? Tell me what you think. That's a much better way to engage than to say, I've got this figured out. This is my deal. I'm 100% right. I get it right 100% up. You don't. And you can see right away that's right.
Very true. And I think the thing that I always remember is once you start pitching, right, your status, your credibility, your timeline and attention starts rocketing down.
Yeah.
People will spend time with you for an hour if you're talking about family and kids and motorcycling and cars. You want to talk to me for an hour? Come and talk about motorcycles and cars, right? Matter of fact, you'll be begging to leave, right? The second you move into deal mode, I'm like, oh, okay, now we're doing that, right? And that I can move quickly. So I have 8-10 minutes for that, but an hour to talk about my family, son, and hockey and cars. So the second you start to pitch, get into sales mode, you better be good because you better do it correctly because the egg timer is on and attention starts plummeting because it's exhausting to listen to someone pitch. Is that your experience? I
can't believe on a podcast having this conversation with Oren Klaff. You're the master. You wrote did the book, right? Flip the script. I think you're exactly right to say, even in your book, I think what you're saying, I hope I'm doing it justice to say, don't pitch. What you're talking about is the environment of the deal, the conditions that exist, why this is important, why it's important now. Those are all the things. And that's not part of the pitch. Those are just conditions. So that by the time you get to the pitch, the person you're pitching is, tell me, what is it? What is it? You got to get to that point. You got to have the relationship. And I think you speak to it very eloquently in Flip the Script. And that's really what we need to do in a more social way. So when you're meeting an investor, to start with, here's my IRR, here's my investment, here's how, you have no relationship. You have no foundation to be able to have that conversation at the point.
Here's where I think about it. Once I know what it is, once I know what the ROI is or the IRR, once I know what the product or the deal is, Once I know the investment yield, and once I know a couple things about it, then I'm like, great, thank you. Send me the information. We don't need to do the meeting anymore. You go, hey, but let me tell you about how the market is changing. I mean, that would have been good to know before.
Right.
That's the setup, how the market is changing if it's a piece of real estate. Let me tell you about the origin of the deal, like how we acquired it. But that is all stuff in defense of the deal afterwards. So these things have to be done in order. Once you tell people what the product is, what the features are, what's the value proposition is, and what the upside or the return is, then the meeting is over. And so if you start the meeting with, hey, we have an infill asset in Manhattan adjacent, up to 5 cap that we're acquiring it at a 6 cap or whatever. We're doing some conversion on it. We hope to sell it at a 4.5 cap and get such spreads. The whole period is 4 years. We're putting in $3 million. Ideally, that would be a 22% IRR over 4 years with an exit strategy, a 4.5 cap, whatever. Great. Send me the deck. Oh, let me tell you, meeting over.
One of the things, my history, we were in hospitality. Then we went to training and development. I was the director of the office of Stephen R. Covey for over a decade doing training and development.
You mentioned that, yeah.
And now we do multifamily. One of the things that we do is we really put a focus on our residents. So we do training and coaching for our residents. So when you sign a lease at one of our properties, we have on-site coaches. We do all that. It's so interesting how if you have that conversation after you've mentioned the net operating income, the cap rate, the basis, no one hears it. They don't care. You're a multifamily guy. You do deals. We get it. You're not going to teach me anything about it. But if you mention it at first and talk about the value of honoring people and what that does to your retention rates, your net promoter scores, then they have time to listen. So you're absolutely right that the way in which you state it not only captures the interest of the potential investor, but also says a lot about who you are and your ability to communicate.
Awesome. I wanted to ask you something else is when people go out into deals, they're at the beginning of looking for money and everything, they're just looking for people with money, but they don't have the perspective. If you're running a fund or you're running capital, you have these very specific allocation budgets. So when I started my career, I was just building tons and tons of relationships for capital. But then when I got a deal, like I had all these relationships, they all took meetings, but they're like, yeah, I like it, but we don't have capital. That's not what we do. And even in real estate, just because somebody does real estate, it doesn't mean they do Canadian, B market, 100+ door, multifamily with 5-year holds. So talk me through, like in your experience, how specific capital sources really are in their buy box.
Yeah, it's interesting because, as you say, you can have a lot of relationships, and some guy might have a whole bunch of capital, but what he's looking for is he's trying to do a 1031 exchange. So he needs to buy, so he's got $35 million, but it's got to be a 1031. It's got to be assigned within 30 days. You're doing ground up. You can't help him deploy that. So it's interesting how the baskets are extremely specific, not only in what kind of asset they could be deployed to, what the mandate is for that capital, but also the time frame. I have another situation where we have a very large family office. It's everybody would know the name if I mentioned it. They have a lot of capital to deploy. They were deployed in one of our projects, but part of their charter says that they have to do a home run on one deal before they could deploy more capital. So even though I know him, we have a great relationship, he said he would deploy more capital, their charter says that until they've had a home run with us, they can't deploy another set of capital with us. So it's not only buckets that are specific, that is specific assets, specific asset classes, but also specific timing. It's a pretty significant puzzle to be playing with.
I think people would be shocked. Even whether it's venture capital, private equity, real estate, notes, lending, how specific the buy boxes are for people deploying capital. They know what they like. And the example I use is people trying to get in venture firms, right? So they send a deal into a venture firm, right? They don't get responded to, or they get a tepid response. Trust me, those fucking guys that they are going to conferences, they're networking 10 hours a day. They're scrubbing bubbles everywhere looking for deals. There's not some deal is going to land in their email box, and they're not able to recognize it for what they're looking for. It's that their buy box is so specific. And so if a venture firm or private equity firm is not responding to you after you show them the deal, it's not because they forgot what kind of deals they're looking for, or they didn't see it, or didn't go to the right person. That is literally, that's all they're organized to do is origination. So if I think about like investment banks, they will pay 40% of a deal in origination. That's how hard it is to find a deal that meets that bank's specific thesis, for the capital buckets that they have 40% in origination, you can bring them a deal. It's so hard to find deals that fit your buy box and that's all those firms are organized to do is look everywhere for that. And again, if it just lands, if you come to work, you're grinding every day for your, whatever it is, you come to work and there's a blue Tiffany box. So you open it up and there's a gold bar in it. You're not gonna be like, it's hard. I don't know. Sell it to me. They know what they're looking for.
Yeah. It's interesting. Early on, I was closing a deal and I had an investor. We had a good relationship, good rapport. I thought this is all in. And at the 11th hour, we're closing, so I need to allocate. And he says to me, he goes, this is an OZ zone, right? And I'm like, no, this isn't an OZ zone. He goes, oh, sorry, the bucket that we're deploying from has to be an OZ zone. So back to your Kurt, where we all started was one thing that I think investors appreciate is when we clearly ask them, what is your buy box? What are you looking for? What are you looking to accomplish? Because I might not have what you need. So let me save you the time. Where are you allocating? How much are you allocating? What are your criterias so that I could see if we could be helpful to each other? A developer that's been around the block will ask that question. A promoter that's trying to raise his first check would not even know that's a question to ask.
1,000,000%. What we try and do in our deal is to bring people over from other buy boxes into an expanded buy box, but we lower the dollar amount like significantly to distraction mode. So like for a deal I have, people have come in and said 1 million diligence questions. And so this is interesting. I'm happy to answer the diligence questions. But the problem is if I have to teach you the market in order to answer the questions, it's just a huge amount of impossible work. So for example, on our Stone deal, so someone will say, why would the distributors carry this over something else? I'm like, do you know distribution in the surfaces market? I'm like, no, I've never done that before. I'm like, okay, so I now have to teach you how distribution works so my answer to you would make sense. And I don't want to do that much work. So why don't we so you're talking about putting in $1 million. Let's pull that number down, right, until it reaches a number where that question is no longer a concern for you. I think it's easier to pull people down into smaller check sizes than it is to meet a unquenchable demand for information. So my question for you is, when people start asking you diligence questions on a deal, how much is a sense that you're just not going to be able to teach them the answers you give them will never satisfy their demand for certainty? Because when people ask questions with diligence, they're looking for certainty. And so how much is a sense like if you answer these questions, you're just going to have more questions and more questions or more questions because they're not familiar with the domain. How do you deal with diligence questions in your business and market?
Hopefully by the time the diligence questions come, I built a relationship with the individual. So we have some trust, we have some collaboration, we know each other. I'm actually fine with diligence questions depending on how they come. So if an investor sends me a list of DD questions, I'm doing real estate, so I know what they're asking, right? It's pretty, I'm not doing some far-fetched idea that they'll even ask a distribution question. They're going to ask me about my market, about the comps, about the rents. When they send me their due diligence question, it's actually another step for me to evaluate the investor. Are they asking me all in one form? Do they have a template? Are they easy to answer? If they have an extensive amount of questions in the right format that are in the right playing field, I'm fine with it. If they're sending me 2 questions at a time, I answer 2 questions, they ask me 2 questions back, they're asking me questions that I'm like, it's irrelevant. There's no reason you would need to know that. So it's not the amount of questions, it's more how they're being asked. And another story, we're working with another family. I find that with family offices, we work really well with families that are $80 million to $150 million worth of AUM, and then over $1 billion. And let me define why. Those that are in that first range are usually collaborative and they want to have a discussion with you and they're participating. Larger than that, they're basically institutions. They've hired staff. The family's not even involved. Larger than that, when you get over $1 billion, you'll get a few family offices that are rather large, but recognize the importance of culture and relationship. And it's kind of part of who they are. So that's why we work with both of those. But we work with a family office that we're in the 80 million range. And we're like, all right, we're gonna do this field goal. We're all excited, but let's come and go to the city where they're at and meet the sons and the family. And we go there and we're sitting at the meeting to approve this deal and to say that we're going to be partners for 6 months or 6 years. And one of the daughters, she says, so on this project that we're investing $38 million in for 6 years, and we know what it's going to look, are you guys going to have pickleball? And we're like, no, we're not planning on having pickleball. And she turns to her family and she's, pickleball's a going concern. Everybody likes it. I don't think we should be investing if we don't have pickleball. It was a due diligence question. I looked around the room for the answer because if this was going to be a situation, I don't want to work with that family office because what's going to happen on disposition? I'm going to be selling to someone and someone's going to say, I worked with that organizer. You can't have that sort of way of doing due diligence or asking questions. And it happens. As a developer, you have to have a screen that says, you know what? It's just not worth it. It's not worth going through a process of dealing with a family that's going to have a due diligence process. So to answer your question, I'll answer as many due diligence questions as are asked. The format and the type of questions tells me a lot about what I'm dealing with.
And what I think I hear myself saying, and you as well, like success around capital markets, deal making, is having enough reach or pipeline or deal flow, because you can't really sell into these relationships. Either you're not in their buy box, you sold too hard, you got an investor that's going to be a problem for you, and as you just highlighted, they're not on your same timeline, and just it's finding in such a small, perfect match that you've got to have reach. And I find that people who are new to this try to work deals. They got somebody who's talking to them. They're even potentially getting an LOI, and they're working that one so hard. Instead of working one, work your territory, right? And it's really about continually expanding your reach. So what'll happen is they'll talk to 5 guys. They get one guy that's interested. They'll stop reaching out, and they'll narrow down into working with. I got somebody's interested. Somebody's responding. Somebody's putting in an LOI. I worked in an LOI shop. Like we just had a mimeographer cranking out LOIs all day long. Didn't mean anything. He's putting out an LOI, they're negotiating. That can go away in an instant, and then you've stopped developing pipeline. If you're in the deal market, you have to constantly be developing pipeline until you really have somebody who's willing to go up hard with cash. People forget how easily deals can die. Yeah. Good reason, for some reason, for no reason. And when you stop doing outreach and start focusing on one party, you better be damn sure that party can close.
Yeah. It's interesting as we're having this conversation, another thought that crosses my mind for these individuals that are just new, try to build relationships with investors and family offices. And I'm interested to know how you feel about this. How do you feel about working with intermediaries, family office groups or other associations that say, hey, if you come to my conference, I'll charge you $7,500 and I'll set up 15 meetings for you and you'll be able to meet these family offices. How do you feel about those sorts of environments versus just paying the price to build the relationships yourself?
Yeah, I think those are generally zero success because if you dig into it, so the number of people who actually need investor relationships, a promoter is going to sell the people they have access to them, right? And collect $7,500 or $75,000 or whatever. And let's say they sell access to people and they invest. Right now they've invested, but that promoter is going to keep selling those people, even though they've invested capital. They want to now be more patient. They don't have any more capital. I would not buy relationships. I would not buy access. I would just do the hard work going out and meeting people. Shocking. There's no quick fix for meeting people. It's boots on the ground. It's hard work. It's connecting, relationship, outreach. Got to work your territory. And I think I would say this, people fetishize cold traffic. By that, going to conferences, means Jacques writes a, $2.5 million check after knowing you for a day, an hour, 15 minutes a week, right? The likelihood, it's the, hey, I'm sitting on a plane. I was telling the guy next to me about my vodka company. It turns out to be Mark Cuban. It was something that he wanted to do, and he wrote me $15 million check. And mythology doesn't happen, not going to happen. Don't expect it to. Boots on the ground, building relationship, working hard, getting out there. Nobody wants to hear that. They want to hear, I bought a list. I emailed the list. I took 10 meetings. 2 people came in for $5 million. I'm funded. That was easy. If you hear that story, A, I call bullshit on it, but B, complete anomaly if it's true.
Yeah, completely agree. I've been invited to them. I've been asked to speak to them, and it's luring. Just like you just said, the concept is luring. So I've taken them up and never had I had any success on those at all, independent of how well they were referred. Or you end up going there and there's 500 people at the conference and 498 of them are people looking for capital, and they've got these 2 family offices that come on stage and say a few words and you'll never see them again.
The worst meeting in the world for me, and it still happens to me sometimes, as much as I know not to step on this bombshell, is I go to a meeting to pitch my deal, and 5 minutes in, I'm getting pitched a deal by somebody who needs money. And I went somewhere to sell, and now I'm being sold. I'm like a captive victim in a spider web. And it's just, oh my God, how did I let this happen to me again? So that's something you have to keep an eye out for. So Jacques, I'm into the speed round part of our couple quick questions about you, and hopefully you don't have to overthink them. But if you had to give a piece of advice to your younger self, say 20, 30 years back, what would that advice be?
I would say embrace not knowing. Don't get panicked about it. If you're ignorant in an area, embrace your ignorance and be okay with it, and know that actually knowing that you don't know is more enabling and more empowering than thinking that you do. As soon as you think that you do, you're actually going to make mistakes. But if you're firmly have conviction in the fact that I don't know and I'm figuring it out, you'll make a lot more progress and try to create the fact that you do know.
Very interesting. Okay, next question. What was your first big deal that you considered, hey, I've made it in the business?
We had a deal in Avondale, Arizona, where we had a piece of land, got it entitled, shovel ready, and we were going to develop it. And some developer came in from Oregon and said, I'll buy your shovel ready deal, and offered us within $4 million of what we would have made had we run the play over 6 years. And just a once in a lifetime opportunity. And it was interesting because, again, you want to make sure it's the right guy. So he tied us up for 30 days in due diligence, and then he was going to tie us up for another 90. And I basically told him, I said, hey, listen, we've got permits. We're ready to go. We've done your ultimate due diligence. You're aware of that now. You've signed an NDA. You've seen everything we have. If you want this deal, you have to close within 5 business days, or not, I'm just going to build it. And I really felt that way. I wasn't bluffing. I had my GMAX contract. I was ready to go. He hung up on me. He swore and he hung up on me. He called me 2 hours later. He says, I understand where you're coming from. We'll do the deal. And they closed cash within 5 business days after doing 30-day due diligence. And that was the largest deal I've ever done. And that was significantly life-changing for me. That was a big one.
That's awesome. What a partner can be, the wrong partner can ruin a deal, a relationship, a company, and the right partner can just make life easy and uplifting and perfect. What advice or thoughts do you have on choosing a partner?
I'll have to go to my daughter, Zoe. She's the one who described it the best. She came to me once and she said, Dad, for so long, my friends have disappointed me. I want to get in a relationship at school, at college, and these friends, they're disappointing me. And she says, I realized that they're not disappointing me. I'm disappointing myself. Because when I meet someone, I create who I want them to be. They're not. I'm just creating them. And then after time, I realize they're not that person. She says, the better way of creating a relationship is to just be the best I can be, contribute the best I can to a relationship, and discover who they are. And when I discover who they are by who they're being, how they're acting, then they're not disappointing me. And I have the opportunity to decide, this is somebody I want to be a friend with. This is somebody I don't. But I'm not projecting. I'm not making them out to be who they are. I'm just allowing them to give me the opportunity to discover. So I say that when you're building a partnership, when you're getting an investor, when you're trying to put a deal together, don't create who the people that you're working with are. Be your best self and allow them to create themselves. I did it with you, Oren. I'm on this on this podcast with you because I believe in you, because I trust you. I allowed you to become who you were. I come to your event. I go to your event. I meet your wife. I meet your son. I get to know who you are. I like this guy. I didn't create who you were going to be, Oren. You created who you are. And I think that's a wise counsel for other individuals that are building relationships. Allow people to be who they are rather than creating them.
Jacques, that's I'm going to put that in a blog post. It's excellent. I haven't heard it put that way. Very insightful. And I really appreciate that point of view. Last question, and then I will let you return to the coal mine of working or go to your family or whatever it is. I find that, so you came here when I have this sort of proclivity or this niche of like, when I do a deal, I buy a motor vehicle. I'm a motorhead. I love that stuff. I find people who are in deals and have access to capital, and they do that many times do interesting or unusual things. Is there an area of your life you could take the lid off of that's fountain pens or stamp collecting or baseball card collecting or something that is interesting and unusual that we could?
I do have one. Sorry to take the lid off of it. My wife and I decided early on that we're going to live off a certain amount of money every year, independent of whether we have a good year or a bad year.
Amazing.
This is what we live off of. And the only exception that I have to that rule is travel is one. And secondly, I really like a nice close. And every time we close a deal or we get a bonus or get to a CO or whatever, we get an extra check. I go to Lululemon and I overspend on Lululemon clothes. So that I do that. I have a lot of Lululemon in my closet and my kids bug me about it. And that's where I go. We close a sale. We get an investor in. We get some kind of bonus. I make it up. And it's always the same Lululemon. It's the Lululemon in Scottsdale because the staff there is phenomenal. So I wait till I'm there and I buy a piece of Lululemon.
That's awesome. I love the Oxford shirt you're wearing now, but if you're wearing yoga pants with that Oxford shirt, I'm going to be pissed.
We're not sharing that. This is what you get today.
Excellent. Thank you so much for coming here, sharing your insights. This is what a real person sounds like. Authentic, honest, outgoing, had been in deals, familiar with deals. This is the voice. If you're in deal making, around deal making, and you're going, hey, is the person I'm talking to real? This is what a real person sounds like. Jacques, I really appreciate your willingness to share your ideas and just letting people hear your voice and understanding what somebody who is actually in the capital business sounds like, talks like, behaves like. This is excellent. I really enjoyed it, and I think it's going to be extremely valuable for people as they listen in.
Pleasure was mine, Oren. Thanks for the invitation, and I look forward to continuing developing a relationship. And I echo right back, anybody who's listening to Oren's podcast, this is what somebody with integrity and who's done some deals sounds like. Right back at you, Oren. Thank you for the invitation.
Thank you so much.